Once you overcome this, you will make literally unlimited money in trading. And I wish this was false, but this unfortunately is true. And it just consists of two things I talk about all the times in my video. You just need edge and a solid psychology to stick to your trading plan. That's all you need to make unlimited money in trading. And of course, you need a good broker, right? Best fills if possible, lower commissions if you can. There's very basic, straightforward things like that. But you just really need a good edge. If you have a very good edge, you can sacrifice some psychology. What do I mean by this? I just mean if you have an EV value of, let's say, 1.5 or maybe something greater than 1.5, you can afford to make a lot of, or maybe a good amount of emotional decisions or mistakes. Maybe you might tilt on one or two trades, revenge trade on maybe one or two trades. So that'll be 2R lost, and you would still be up for the day if you have a very good system, right? But if you have a very poor system and edge, a strategy, it's going to be rough, man. You're going to be either very close to break even if you're following your training plan, or if you make a lot of psychology mistakes, you'll end up being in the red. So you want to optimize, look over your review, your past trades, see what you can do better to improve your trades, because there's always ways to improve your trades to a certain point. The equity curve for a trading system is typically something in the lines of a log function. You guys know log functions, as it goes towards its limit, it tends to smoothen out. It's not an exponential function like this. So if you have x, you have a y. It's more of a function that goes like this, where there's diminishing returns. It's the same as a diminishing return curve, where at some point your skill and years of experience or skill can only get you so far in terms of your EV value of your system and optimizing it. So in the beginning stages of you practicing your strategy, your system, you will make big improvements to your EV. But the further you go on into optimizing it, you might lose out on some net RR, even if your EV is going higher. Why is that? Well, because you are filtering bad trades, but sometimes filtering those bad trades also filters out some winning trades. And therefore, it could potentially lower your overall risk reward that you're making, that total, despite a higher EV value. Now, what you can also do is, of course, increase your risk per trade. But typically that's not advised unless you are already risking very low, just because drawdown. A lot of people can't psychologically handle like a 50% drawdown, things like that. I suggest keep your trading systems to a max 20 to 25% drawdown. Anything after that is definitely harder and takes, I just personally would not like anything more than a 20% drawdown personally, on a personal account. If you're on a funded account, sure, you could have a negative 50% drawdown and still be fine for the most part, unless you go tilt, right? But that's a funded account. You're not losing actually that monetary value. You're just losing your activation fee and combine fee. So hopefully you guys found this video helpful. It's just basically showing you guys how this is how you can make really unlimited money trading to a certain point once you overcome these two things, your edge and psychology. But mainly focus on your edge first. Then psychology comes in later as just discipline.